Do you want to earn CPE credit? Take this course of MY-CPE to earn free credit. Click the link in the description to get started.
Hey, and welcome to this short. What we are looking at today is going to be a new proposal basically on a net uh, unrealized gain tax that is being proposed by the Biden administration as part of their 2025 budget. And kind of coinciding with this too, that I want to throw out is the 44.6% top rate that is also getting thrown out here as well. So I want to cover both of those. Really focusing on the unrealized gains and more here. It's really interesting, and just to preface this too, I don't want to go into politics too much. We are tax advisors. Unfortunately, taxes are political. So left, right, we don't care. We care about what's going on with our clients and how we can best help our clients. And that's one of the things, typically when we have stuff like this, we'll get, people pushing out things. Hey, this is terrible. Everything in the world is ending. One of the tax twitters I saw a guy, I have this quote written down here. One of the ones for the 25% gain was, yeah, I'll just do the direct quote. It's difficult to describe how insane a 25% tax on unrealized capital gains is. Not a one-time 25% hit. It's compounding annually, taking 25% of every dollar potential increase before it can grow. Not an exaggeration to say it could single-handedly crush the economy. I will leave the United States at the passing of this. Well, he says, if this, of this. That's kind of the fear rhetoric we get whenever we get tax bills sometimes. So what I want to do is I do want to kind of analyze who this affects, what's going to happen, and will happen. So to get into that, first, a 25% unrealized gains tax. Who will it affect? And that's the interesting thing here. Honestly, most people will not be affected. The proposal says $100 million in net assets. I think for us, what does that mean for us? Well, we need to start tracking our clients' net assets, right? Because if we don't know they're over 100 million in net assets, then we're not going to know if they're subject to this tax. So that'll be one of the first things that I think would be a big effect on us. But I think for general taxpayers, our clients generally, 99.9% of them don't have $100 million in assets and are not affected. So, while we see a lot of scare things, all that, honestly, it's not going to affect, most, if not any, of our client base, depending on your client base. So, I mean, there's that. That's the one thing on the 25% tax rate. The other thing with the 25% tax rate I want to toss out is this case. It's called the Moore case. It's in the Supreme Court right now. And it's one of the ones that you really want to track because what they're looking at is does the U.S. have the ability to tax unrealized income? And that is, in general, it's looking more at some Tax Cuts and Jobs Act stuff dealing with foreign revenues that weren't earned. But depending on how the Supreme Court actually interprets this, it can affect much more. One, under constitutional, you can interpret it saying the tax is unrealized, and that's probably how the Supreme Court is going to go. But where do they stop what realization means? And that's going to affect any kind of proposals for an unrealized gains tax, right? Or a net wealth tax that is being proposed here. On the flip side, it's also going to affect us. This is actually going to affect everyone, unlike, the 25% over $100 million. Because think of it this way. You have a partnership, right? Put in $100,000, you get a K1, and it says you have ordinary income of $200,000, and you get $0 of distributions. What is your actual realized income there?
Do you want to earn CPE credit? Take this course of MY-CPE to earn free credit. Click the link in the description to get started.
And I think, and they actually make the argument in the case, that in the partnership context, your realized income is zero, right? You didn't earn any money. You didn't see any of that 200,000. Yes, the partnership made $200,000 in net income, but there's no realization at the partner level for the partner to be taxed, right? So if we get an interpretation like that in the Moore case, it will fundamentally change how partnership taxation is done, S corp taxation, and kind of pass through entities, right? So it's a huge case, and not just this proposed tax that we have out there, but just taxes in general. So it's one of the ones that we do want to be on the lookout for. We should get a verdict this year. That case, just in case you want to look at it more, it's Moore v. United States. Thought I had the actual it's docket number 22-800 is the pending case. So definitely check that out because it's going to be a huge Supreme Court case. We don't get a lot of Supreme Court cases in the tax world, so it's going to be one of I think the cooler ones that are out there. So yeah, so that's kind of where we are on this unrealized capital gains tax. So not only, do we have the presidential election and the Senate and the House to see, if they're going to get enough votes to be able to pass this. Because right now, with the Republicans holding the House, there's no way this is going to pass the House, and tax bills have to originate out of the House. So it's going to be contingent on any kind of election. So that's step one for it to do. Step two would be you would need it to also pass the muster of whatever's going to happen more of the United States. So we do want to pay attention to that as well before we start panicking. And then, anytime we see stuff like this, you get a lot of headlines, and it's like, hey, like, I read that guy's quote on Twitter. It's like, hey, I'm going to leave the United States if this passes. Well, I mean, our clients read stuff like that. They panic. They email us. It's time when we have to sit them down and be like, it's a proposed bill. Nothing's happening. If it does happen, you're not going to be affected because your net assets aren't over 100 million. If they are over 100 million, then you probably have to do some kind of tax planning and kind of figuring that out as a just in case scenario for them if they really want you to. So the other one too that's getting thrown out there is that 44.6% rate. The 44.6% rate that you're seeing is a combination. It would increase the highest tax bracket to 39.6%, and it also increases net investment income tax to 5%. So our capital gains tax goes to 44.6%. Now you might be saying, hey, wait, capital gains tax is 20% is the highest. Well, for this one, if your earnings are over $1 million, we have another we get another capital gains bracket where anything over $1 million in capital, based on how the bracket goes, over $1 million is going to be taxed at the highest tax bracket instead of the 20% tax bracket. So again, if we have our clients and they don't make $1 million and they're like, oh, my capital gains tax is going to be so much. Well, no, it's going to be the same. Everything's the same. The only people being affected is this $1 million or more, because that's going to change your tax bracket from the 39.6% or from 20% to the 39.6%. The net investment income tax increase comes at, I think it's $400,000. So anyone below $400,000 is 3.8%. Anyone above $400,000 is 5%. And that aligns really with the Biden administration's original proposals back when they ran for office the first time, that they wouldn't raise taxes on anyone making less than $400,000. So, as we see more and more of these tax proposals come out from the Biden administration, they're going to align really with that $400,000 figure. So if you're making under $400,000, most of the things will not impact you from a tax standpoint. Now, there's people can argue different things like, hey, raising tax rates changes GDP, stuff like that. GNP might have an effect on wages, all those different things. That's a totally different argument that we're going to save for a different discussion. But in general, the $400,000 when we're talking to our clients about the election and what we can expect from the election is usually the cutoff when we want to talk about the Biden administration. So I definitely think a lot of fear mongering on some of this, but if we dip in, look at the analysis and see how it works and how it functions, we're probably okay. And really, I think probably your biggest takeaway here is, help your clients, let them know stuff is out there because they ask how many times. we're all tax practitioners. I get the emails all the time. Hey, what's this mean? Should I leave the United States? I think I get those questions a lot. And then make sure that we can help them. And the second one, I think honestly the biggest takeaway of this one, if we're going to learn anything on this, is pay attention to this more case. The more case is going to be a big case in us in our tax world. So pay attention to that. Read up on that, and that's one where I think you're going to want to help your clients the most going forward, because it's going to have an impact on not just this. It'll have an impact on some of the taxes that they currently pay, and it could affect all taxpayers. So I think that's all I have on this little proposal. It's going to be an interesting one. It's really, real. I mean, we've had guilty and stuff like that. We do have wealth-based tax. In essence, not really wealth-based, but unrealized gains taxes. But it's really the first one that is more kind of wealth-based focus, where we're focusing on a group of people making $100 million or more. So just seeing that proposal, and if it does pass, it'd be really interesting. We've seen a couple others before in the past by Democrats, mainly to have a tax like that. So it'll be interesting now if we actually get language, see what it looks like, and all that. All right, so have a good day and take care.
Access latest and trending CPE courses with My-CPE's unlimited access subscription. Subscribe now.